If you misread this candle, the market will mercilessly wipe out your account. 90% of traders enter right at this point, and it's exactly here that they get wiped out. This trade looks perfectly fine, but it's going to hit your stop loss. Price action is about reading the market's lies, not just the candles. Hello, I'm Farhad Vatan, a financial market analyst. And today in this video, I will be here with you step by step to carefully and thoroughly teach you the price action method in a completely new and innovative way, making sure you understand each part clearly and confidently. And to briefly discuss the mistakes that most traders, 90% of traders make in their trading activities, which often causes them to get stopped out and lose a significant amount of capital. Please stay with me until the end of this video and really learn the subtle points you need to know about price action. As you can see on the chart, after the upward trend and the well-organized lows and highs we had along this trend line, as shown here, we see a break at the 1.16 price level. Most traders, upon seeing this kind of break and subsequent pullback, would typically enter a sell trading position, and they might place their stop loss order right at this particular point to manage their risk. But unfortunately, after the break and pullback, the market reverses and hits their stop loss. These are the kinds of mistakes that most traders make. Let's take a look at another example together. You see, right here, there's a downward trend line. After the break, traders enter a buy position, but then the price unexpectedly reverses and ends up hitting their stop loss. Look, when we talk about price action and also about the entry points that we plan to take, we really need to draw support and resistance levels as well. What does that actually mean? Look, when an uptrend line is formed, the very last low that touched our trend line becomes especially important. 10, we can identify a support. As you can see in the picture, I specified it. This means that after the market decisively breaks through the trend line and breaks the key support, we can enter a sell position. We can't do it until this trend line of our support is broken. As you can see, after the breakout or break of our support line, the price bounced and hit the stops. So the last low that meets our trend line can serve as our support. Look at the next example. We have a line of Randy. The last low, the last high in the downtrend line after the break. See if it reacts to this resistance line and turns around and hits our stop. So the very best time to act is actually when this resistance level finally breaks. And at this point, we could enter a buy position without placing a stop order. Then, for instance, let's take a look at another example. The market has a flat line. We specify the last floor. After the breakout, pullback, and decline, you see the market rebounding from the support we had at the last low. After the support, we could then enter a sell position here after the decline, where we could also place our stop above this candle. This is a valid trade that we can make with price action. Let's go ahead and look at other deals. A downtrend line, a ceiling before the breakout, a ceiling before the breakout. You see the market is coming back, pulling back and coming back down. We didn't enter a buy position here because we were also hitting our stop loss. We wait for the remaining resistance to break and then we enter a position where we can make a profit from this logic. With some examples that we can give once again, let's look at an ascending trend line and also the last low point that I will show you here. We carefully identify the most recent floor that we have encountered. After the trend line is broken, we can then enter a sell position here and we can enter a sell position and set our take profit level as planned. Here's another example. You see, after a trend line is established, we identify a resistance level that has reacted to our trend line. After the breakout, and once that breakout occurs, we can enter a buy position. We could have placed our stop loss here, and without getting stopped out, we could have taken a profit with a risk to reward ratio of 1 to 5 or even 10. So, my friends, always keep in mind that when we're looking to enter a position using price action, a trend line break doesn't signify the main breakout or a signal to enter a position based on that break alone. You absolutely must identify the support and resistance levels within the ascending and descending trend lines. Only after a breakout of these support and resistance levels should you enter a position. Most traders make this mistake, and most traders, I mean 90% of traders, get their stop losses hit. I hope this video and this tutorial have been very helpful for you. If you enjoyed my tutorial, please be sure to hit the like button, and to see future analyses, subscribe to the channel. That way, you'll always be the first to see my new analyses. In the next video, which I'll be posting on my YouTube channel, we'll be executing trades using price action and RSI. We'll see how by combining these two styles, or let's say the RSI indicator and price action, we can have some very interesting and profitable trades. Until the next video, goodbye.